right? And don't involve yourself in all this daily gambling, where stocks go by 40% and 50% every day. I think, and your life is about attitudes. So the mature attitude is to invest safely, give your money to experienced people to invest, to mutual funds, to fund managers, and expect a return which is reasonable.
This clip before was a late Mr. Rakesh Jhunjhunwala, a legendary investor in the Indian share market giving advice to new investors in the market. Before trying to understand what to do in the market, first let's understand what exactly is the stock market and how it works. Let's start with the basics. What is a market? Why do we go to the market? We want to purchase a product, example foods, clothes, toys. The same way we go to the stock market to buy portions or shares in a company. Now, let us understand what is a share. A share is a small part of a company. When you buy a share of a company, you are now a co owner of that company. Let's say you buy a share of Amazon, and Amazon only has 1000 shares. This means that if you buy one share of Amazon, you own 1 out of 1000 of Amazon. This is just an example, of course, where big companies like Amazon have millions of shares. A group of shares together is called a stock. The main purpose of the stock market is to help facilitate the transactions of selling or buying of shares of a company. Although, on a stock market, you can only buy shares of a publicly listed company. Example, you want to buy shares in the company that makes Snickers. You can't do that as its company is private. However, if you want to buy shares in Hershey's, that is possible as it is a publicly limited company. For better understanding, let's imagine a coffee company that decides to launch onto the market. First, they start advertising the company to big willing investors. These investors get the first crack of buying shares of the company, and this is known as the IPO or initial public offering. This launches the company on the market, which means anyone sitting in their office to their home can buy parts of this company if they believe it will succeed. Buying parts of the company helps the company grow, which means more buyers could see the business potential. As demand increases, so does the price of each share of the company. This increased demand helps fund new initiatives like new coffee outlets, etc. If the company shows less demand, the reverse could also happen, with the company losing a lot of its share price and it becoming less valuable. If the investor feels that the company's stock price is not going to increase, it sells its share in the company. As the pieces of a company are sold and reduced demand, the price for each portion of the company or share price also reduces, and with it, the company's market value. This shift between demand and supply of shares and people buying the shares decides the price of stocks. Of course, this is just a simplified version of it, where in reality there are hundreds of deciding factors of the demand, such as increased price of raw material, changes in production of technology, and the shifting cost of labor. Investors may be worried about the changes in leadership, bad publicity, and the change of laws against the company. There are many other large factors, such as government investing money into a company, boosting the share price of that company, and its investors making a lot of money. An example of this is an Indian state bank, such as LIC, buying shares into Adani, making Adani investors a lot of money. This being completely unpredictable. But you don't need to worry about these complex factors as of now. All these factors cause day to day noise in the market, and this is where the common notion arrives into the Indian parent comparing a stock market to an open gambling casino. This is obviously not true. Unlike a casino, there's years of thinking that goes behind investments into a stock. Well, in a casino, it's just your dumb luck that makes you money, and of course, loses you money. An example of a strategically calculated investment is Tata Power. The factors that favor Tata Power, with cost of labor being similar and demand of power continuously increasing in a growing country like India. An investment of 1 lakh rupees in Tata Power in the start of 2020 would have been 6 lakh 60,000 by now. This is the power of strategic planning, research, and investment into the stock market. Nowadays, the stock market is not only for the rich and the powerful, but even the layman can enter into the stock market, especially in these modern times with advancement of technology. In many apps like Zerodha, you can open a Demat account and get to investing within 15 minutes, verifying all your details, allowing you to invest in the same companies as the rich and the powerful too. And as more investors educate themselves about this system, collecting information, researching, they can also invest the money and see stable returns. Investing can help you support the businesses you believe in, contribute to the economy, and pursue your own financial goals. And the first step is to invest. If you like this video, please subscribe, like, and share with your friends. Thank you for your time and for your support for this channel.